on the US non-farm payrolls, which are coming out later today. Why is there always such a massive emphasis on this number since they've sort of reached their target of unemployment being at 5%? Why is the market so enthused by this number?
Well, it's a very important part of the Fed's mandate because, like most central banks, they focus on inflation. But unlike most central banks, they are expected to temper that consideration with considerations vis-a-vis employment. Now, although we are at 5%, which is considered normally a low point, I think it's important to bear in mind that there is a significant number of workers who are what you would call those who've basically given up. And they effectively fall out of the unemployment category. And in fact, that explains part of some recent numbers where we've seen its level of 5%, we've seen employment growth, and yet unemployment stay unchanged. And that's because of this effect. So the Fed is definitely going to keep a close eye on payrolls, and they're going to keep a close eye on that change in underemployed people.
Okay, now we've seen that markets for most of this week have been consistently sort of on a downward spiral. So apart from anticipating what US monetary policy will do in June, which seems like, years away, what other factors are at play?
Well, I guess they're going to obviously keep an eye on inflation. We, in the meantime, are looking at a set of quarterly numbers coming that so far do not look very encouraging. So the market generally is anticipating data that is going to be weak. It's bracing for it. We're already seeing the dollar finding its footing again. You're seeing US bonds a little bit firm, and that is indicative of anticipation of ongoing weakness, which is a little bit disappointing, particularly for the likes of commodities. Hence, we're seeing also weakness in commodities.
Yes, one of the companies that came out with a quarterly update was ArcelorMittal, talking about how, demand has gone down. It's producing like 9% less than it was in the previous year and so on. But this phenomenon is a global one. I mean, only yesterday we were reporting about how the UK is concerned that if it comes out of the EU, it's going to be faced with anti-dumping measures from the EU and suffer even more because that industry is suffering quite a great deal. Your comments on the stock and the industry at large?
Right, okay, well at Arcelor itself, I think despite a tricky set of numbers, it is quite encouraging looking through there. I mean, for example, sales were up, and that's despite production down. And that to me speaks of a company that's clearing decks somewhat. And the other encouraging factor is that they did at least get some small tariff protection come through. Now, although tariffs are technically a dirty word, in the case of steel is often in the global context handled as a dumped product, and I think it's only fair that you have a situation that there's some small measure of protection against basically hostile dumping. As far as the EU goes, I mean, well, that's going to be another tricky scenario altogether. I mean, if we have a Brexit voted for, what then? The EU isn't really a political organization per se. It's a series of treaties, many of which its people haven't voted for. So if you get a positive vote for Brexit, it would then be a case of, well, how on earth do we do this? And that, I think, would lead to quite a lot of uncertainty, both for Britain and for Europe. I would expect that most of the original trade agreements, which is what the EU was originally all about, would probably stay in place. But no question, it would be a messy extraction.
Let's look at MTN. I see an influential hedge fund manager by the name of Jim Chanos of Kinokis Associates. He's decided to short MTN, which just basically means sell off MTN, because he says the markets that it's serving are mainly commodities-driven markets and they're on a downer. Isn't that a little bit of an overreaction, because this is a cyclical problem, is it not?
Yeah, I mean, it is a somewhat cyclical problem, and Nigeria has, to some degree in recent years, seen its economy diversify out. I mean, it's quite a lot wider than just oil, and that's a big economy. His reservations about Nigeria, I mean, I can't disagree with that. I mean, it's, you're looking at a fine there. That's basically and if you looked at MTN Nigeria on its own, I mean, it's a company smashing fine. So to be quite honest, if I was to see MTN pull out of a country that really obviously doesn't take foreign investment seriously, well, I wouldn't shed any tears about that.
And what about the stock MTN itself? Would you still invest in it given all its woes?
Despite its woes, it's actually quite good value. It certainly are in a number of geographies that are very attractive. Iran is a high-growth economy. Many of the African countries it's invested in have got population pyramids that are very, very attractive to a cell phone provider.
Okay, we're going to leave it there. Thank you so much, sir.
My pleasure.
That was Warwick Lucas. He's from Galileo Capital. More business news for you after the break.